Good morning, traders. It is Friday, April the 1st. Taking a look at the charts today, we have got some serious price action going on. The stock market has fallen 5% in overnight trading. Gold is up 15%. No, I'm just joking. April Fool's joke. Hopefully, hopefully I didn't give anybody a heart attack. Anyways, let's just go over to the real-time charts here. Let me reset the scale. Um, let's just take a quick look at the SP 500. I got a bunch of things I want to cover today really quick, just about the service in general also. Let me touch on those first. So the first thing I'd like to just quickly touch on is if you go to the members area, when you log into the members area, you're naturally going to come to the home page. If you go over here to the instructions and disclosures, I put a video in here about a month or so ago that explains how the service works, all the features and benefits you'll get out of the members area. Make sure you watch that. If you haven't downloaded and read my book, you can click this button right over here. Just keep in mind that button is on every page. So even when you're on the home page, you can click that and it'll pull up the PDF. You can right click it, you can save it, the PDF file. And of course, there's the daily archive videos. You can click this button here, or you can go to the navigation, daily archives, and you can see, here's March 2016, so you can see the video, all the videos posted from each day going forward. A couple other things I want to touch on real quick. The spike trade alerts. Those are just an added benefit for those of you who are highly active and can trade on your own. I give you that information so you know the bias for the day for that. For yesterday, it was kind of the GDX and gold. The bias was going to be to the downside. You could short the market. If you were long, you could hedge, you could day trade it, whatever you want. But that's something I don't send out email alerts. I don't send out SMS text alerts. I just send out a post saying, here are the price spikes. This is kind of what the odds are pointing at, and you can do what you want with those. That's just to satisfy you very active traders who want to, who are at the computer all day and are looking for high probability trades. Now, the Golden Oil Guy newsletter is more swing trading. And we're eventually going to get into some long-term investment trades also for our long-term portfolio, which I think we're starting to get very close to the major setups. I've talked about it before. And that's the core of the Golden Oil Guy, is to catch these swing trades that'll last, 3 days to maybe 30 days long. And then also eventually we get these investing signals that are going to last months and months and months. Some of them might even last a year or more. So the thing with the long-term investing signals is they come and go. They happen. You get a wave of them every 4 to 7 years. The market rotates and moves, just like I explained on the homepage video of my website. These opportunities don't come up very often, and they're coming back again. And we're about, I think, to enter some of those positions for the long-term portfolio. But we just have to be patient. It's best to get into a play near when it's very mature and getting ready to roll over and move in our favor than to know it's coming and just jump in now and ride out all the volatility. I'd rather get in more near the end of the kind of trend just before it reverses or as it's reversing and catch the move, so our money gets in, our positions move into the money quicker. A couple other things also to talk about. Let me pull up DZZ. I'll pull up, for example, here is the D. Yesterday I talked about the price spikes in the gold miners and the GLD. And I had a member write yesterday saying, how can you, get all excited about an 8-cent move up from yesterday's. We had the previous day close in GDD or GDZZ. We got long over here, caught this nice pop up, and then yesterday the market opened lower, but it ran all the way up to that level, and then at the second half of the afternoon we saw it move up and gain another 8 cents. Now, this 8 cents, I was getting some flack. How can you talk about that being good? Well, that's a 1.2% gain in one day when we knew the odds were pointing to the market moving higher. And of course, with that spike alert, I know many traders got in right at the opening the next day, and you got double that move. You're getting a 2+% gain on that move in one day for the short-term traders. So just because it moves 8 cents, it doesn't seem like much, but keep in mind it's only a $6 share. And in the spike alert I sent out, or the update I sent out last night, talking about how, a lot of the spike alerts we get have a $1 or $3 per share move. Well, I'm talking about most of the spike alerts happen in the SPY. Of course, it's a $200 uh, per share, so it's easy for it to move $1 or $3 on some of these big spikes. So just keep in mind everything is relative to the price. And you know, this one person was talking about the Dust ETF, talking about how it moved 12 cents from the previous day, and you know, how can you talk about that being such a good move? Well, 12 cents is a 3.8% move from the previous day's close. And with that spike alert getting in at the open, it was about a 7.5% move in one day with that price spike if you got in at the open. These are huge moves in one day. And just because it moves to 8 cents or 24 cents, it doesn't seem like much. It's a lot of money when you're looking at a $3 share. It's so you got to really take things into account, what the price of the share is and what it's doing, and just run the logic. Just see what the percentage is. You know, it's all based on percentages. It doesn't matter if it moves 1 cent, which could be 50% move, or it moves $3 and it might be a fraction of a percent move. Either way, you know, there's all these opportunities, and on a percentage basis, they're still pretty decent, and earnings per share make a big difference. Let's just jump over. Let's just jump right back into the charts here. Get back to the real analysis. Get back to the daily. Here we go. SP 500 continues to work itself up here. We're getting that volatility. We had a pullback, a big pop. It's been consolidating a couple of days. We're going to see it come all the way down and fill this void. You can see we got a price. Zoom in here. You can see we got a little bit of a price gap. We gapped up. We're coming down, and today we're definitely going to fill that gap, the price gap at the open, and we're going to get choppy here. And this is what we've been talking about. I think we're going to see the market chop around for, who knows, a couple more weeks. But overall, it looks as though we got about 5 days left before the cycles are all topping out. And then I think we're going to start to see it become a lot weaker and eventually move substantially lower. Taking a quick look, let's just pull up the Russell 2000 real quick, see what the small caps are doing. Small caps, major volatility. Look at the price. It's starting to chop around, makes a nominal new high, gets everybody excited, crashes it back down again. It's up at nominal new, makes nominal new highs, and it's probably going to pull back again. But overall, we're getting right up into resistance. I wouldn't be surprised if we see this kind of really pop and move up. The fact that we're seeing the Russell 2000 have these big kind of up days is telling us that everyone's getting really bullish. And the amount of emails I'm getting that everyone's talking about the stock market, you know, there is no bear market. This is it. Like, it's moving higher and going to all-time highs, and how they missed the bottom in gold, and how gold is going to continue to move up. And all those are signs to me that everybody's now just starting to get panicky, and they're starting to think that, you know, they need to get into the stock market, they need to buy gold. And I don't see it that way. From a technical standpoint, the markets may take off and explode to the upside, but we play the markets one wave, one cycle at a time, and we just trade with the trend and the odds. And it doesn't matter really which way it goes. We've got a pretty good gauge of where it's going, and sometimes it's going to go against what we expect, but that's just trading. And I think what we're doing is extremely logical and makes sense, and I've been doing it for years. So we're just, don't get your emotions all, don't trade off emotions. It's really easy to let the emotions fall victim and to read other people's articles of all these bullish stories and things you need to do. And you know what I do, I don't watch the news. I don't listen to the news. I don't read articles. I don't watch and follow other people's analysis. I might take the odd glance at something, but as soon as I start looking at other people's analysis, I usually fall right off the wagon. I find it really difficult because most people are doing the opposite of what I'm doing. And it's really tough to follow multiple people because everybody's got their own strategy and everybody's got their own time frames they're looking at. So while I might be bullish still for the next few days for stocks, a whole bunch of people are screaming being bearish. It's really easy to get confused in what time frame people are talking about. So that's where we are with that. Let's just take a quick jump over to the VIX. The VIX has been working its way down here, kind of sidestepping. Ideally, I'd like to see it, let me zoom out a bit. I'd like to see something very similar to this unfold. So we are coming down into this, down at this level. Wouldn't be surprised if we see it kind of pop up but continue to grind lower. I think we're somewhere down in this stage. And this is where our cycle analysis comes in really handy. I know a lot of people have been buying the VIX way back over here and over here. And of course, they're left holding this position, and the ETFs lose value as the VIX continues to go sideways. Even if it doesn't go up or down, it still loses value. And then eventually you get that big pop, and they end up only making this little bit because they got in early. Well, the cycle analysis allows us to kind of see all this and watch this volatility and the sideways chop start to form, and then we can try and position ourselves in the later half so we get an explosive move at a great price in the later stages. And that's what we're waiting for, is to try and get in just before price moves. You get in, make your money, get out. The less our money is in the market, the less it's at risk to some crazy event happening. So we just want to try and catch the move as it's just unfolding, get in, get out, and move on. Jumping over to precious metals, gold down almost 0.5% now, starting to move down. Again, our cycle analysis shows that we've got multi-week. Actually, it's actually showing us selling off pretty much all the way into May. We'll see how that goes. That's a long ways out, but we could see gold come all the way back down to 1140, possibly even lower. Some great downside potential. Of course, gold miners will do the same thing. Gold miners chart is very ripe and ready for a sharp correction to the downside. Also, they all move in sync, pretty much gold, silver, and gold miners. I like the gold and gold miners better than silver. Silver's kind of been, um, on a percentage basis, still got lots of potential. It still has a nice percent move all the way down. I just don't like the chart quite as much, although this is starting to look like a pretty nice little bear flag forming. And, once one moves down, they pretty much all move down. So it's a kind of a basket play. Looking at natural gas, up 1.6% this morning. We're just leaving this. Overall, I've talked about this many times. We've got a beautiful major potential basing formation. We're going to let this kind of work itself out here. I think long-term natural gas is going to be a great play, but not looking to jump into it just yet. Crude oil down 2.7% this morning, continues to move down, kind of flush itself out. You can see the Fibonacci level down here. It could easily come down to this level. It has been bouncing around between these floors. It goes up, comes down. Each one of these is a Fibonacci retracement level. Of course, once it breaks through a ceiling, it goes to the next ceiling, which is the next Fibonacci level. And it came back down. It's been trading here for a couple days trying to hold this floor, and now today it's breaking that floor. So I wouldn't be surprised if it comes back down to the 36 level from here. And overall, I've talked about we have about a week of weakness in oil still, and I figure we're probably going to see some type of bounce. If it comes down to the 36, we're going to probably see it bounce back up to the 38, 39, or potentially back up for a double top here over the next 2 or 3 weeks. And then I think we're going to see it continue to move down with 32 and potentially a triple bottom and poke to nominal new lows if that takes place. But we'll see how that unfolds. But that's what I see kind of unfolding going forward for crude oil. Taking a look at the US dollar, UUP index, we are down at, let me zoom out just a little bit here. We are down at a pretty critical support zone, just dropping across here. Every time the dollar has come to this level, we've seen a strong rebound. And, strong dollar means weaker commodities. So we could see crude oil and gold and everything really pull back just as we've been expecting. We'll see how that goes. Again, if the US dollar breaks down here and flirts down here and holds below this level, then we could see a massive drop in the US dollar index. Now that there's no interest rates hike on the board, that does hurt the US dollar long term, and this could unwind in a big way, and that could be the start of the big bull market in gold and silver. We'll see how things unfold. We're just going to play it one wave at a time. That's it for now. Bye-bye.